Welcome everyone, I'm your host, Adrian Hernandez. Thank you guys for tuning in to today's episode. And if you haven't done so already, please do me a huge favor, hit that subscribe button. Make sure you share this episode with everyone you know. Really appreciate that, especially today's episode. You guys, today I have a treat for all of you. I'm speaking to all of you home buyers out there. Yes, all of you home buyers. Whether if you're a first-time home buyer, whether if you're moving up, you're selling a bigger home to buy a smaller one, or you're selling a smaller one to buy a big one, or if you're simply getting out of Dodge, right? You're moving to a new state, or especially if you're a VA, you guys, you VAs, congratulations. Thank you so much for the service that you do for our country. The country rewards you guys. You're able to buy a home with $0 out of your pocket for a down payment. How awesome is that? So you guys, this video is for all of you home buyers out there. You see, by the time you're done watching this, not only are you gonna feel comfortable, but you're gonna feel confident about buying a home. You're gonna know everything it takes. So when you go to buy a home, you're not stressed out, you're not frustrated. You know exactly what to expect. You know exactly what the road of escrow looks like. What's escrow? Who's this MLS guy? You'll know about the different agents. This video teaches you everything you need to know to be an educated home buyer out there in the real estate market, okay? And then I also have a treat for all of you. Whoever watches this all the way to the end, at the end, I give you some great information on how you can buy a home with little to no money out of your pocket, especially you first-time home buyers out there, VA buyers, veterans. I'm gonna show you how you can buy a home with no money out of your pocket. Yes, that's correct, but you gotta wait till the end, okay? It's not a catch or anything. I just wanna save the best for last. I'm not gonna leave anything out of this process. I'm not gonna leave anything out of this video. I understand out of the hundreds of home buying conversations I've had, every single one is different. So I wanna make sure I don't leave anything out here, okay? I wanna make sure you get everything. So do me a favor, grab a notepad, grab a piece of paper, grab a pen, because I want this to be interactive, okay? Maybe even grab a highlighter, because I want you to take notes. I really want you to go back, rewatch a section, reach out to me if you have any questions about that section. I really wanna know and make sure that you feel comfortable and confident about buying a home, okay? All right, guys, so we're gonna get started. Are you ready? I'm ready. If you need to bring anybody else in the room to watch this with you, invite them over now. Go grab your piece of paper, grab a pen. You guys ready? All right, let's get started. You guys there? All right, let's go. All right, guys, so we are going to be speaking about the home buying process. And before we get started, I want to give all of you, first and foremost, I want to give all of you a huge round of applause and a congratulations to each and every single one of you for starting the home buying process. It's an exciting time, especially you first-time home buyers out there. Oh my God, I'm beyond excited for you. Yes, it's going to be, you're going to feel a little nervous at the beginning, but that's why I'm here. I want to help us stay excited throughout this process. So I want to give us the biggest rule throughout this entire thing, okay guys? Can you agree with me on something? Can you agree, and this is rule number one, can you agree that we'll have fun? Make this process enjoyable. Yes, I understand it's a serious process that we're going through, but lighten up a little bit, okay? Just shake it off. You ever feel stressed? Just shake it off. Understand that it's going to be okay, especially when you have the right guidance like this video, okay? All right, guys, so let's get started. Let's talk about who's who, okay? So I want you to write down who's who. These are all of the professionals that are involved in this transaction, okay? This would be section one, who's who. Now, we need to understand that under who's who, we have realtors, okay? Now, realtors are separated into two separate categories. You have a listing agent, so you have a listing agent up here. Now, why is the listing agent important? That's the agent who has the home listed for sale, okay? They're the agent who went in and they listed the property for sale. They met with the seller, they're listing the home. Does that make sense? And then there's a buying agent. Now, the buyer's agent is the one that typically works with the buyer. They're the ones that bring the buyer to the property, and that agent represents the buyer. Not all of them only specialize in working with buyers. Some of them, a lot of them, like here at our team, we do both, right? We do buying and listing. A lot of you agents do the same thing. A lot of the listing agents, a lot of the times represent the buyer. So understand that, but be aware. Because if you ever go directly to the listing agent, there's this, and this is a pitfall, guys. Let's talk about pitfalls. This is a pitfall. A lot of buyers go directly to the listing agent, but if the listing agent doesn't have the buyer's best interest in mind first, and they have the seller's best interest in mind first, then we have to ask ourselves who's getting a better deal here. Now, we do a lot of these where we have a listing and we also represent the buyer, but we're very fair about the way we do it. 90% of agents are very fair about the way they do it. However, just make sure that you do a little bit of research about the agent, ask the agent how many of these sales have you done. This is very important, okay? You want to make sure if the listing agent that you're going to, you're going to cut out another agent and you're going to go directly to the listing agent, just make sure they have both of the parties' interest in mind, okay? Which is you and the seller. Make sense? If you guys have any other questions, make sure you ask your agent about that. Feel free to ask me, but it's very simple. Now, when you guys go to work with the buying agent, that buyer's agent's going to be the one to take you to the property. He's going to open up the doors. He's going to show you around. He's going to give you information about the neighborhood. So that's what your buying agent typically does. So does the listing agent. You typically go through a buying agent when you are a buyer. Now, this is something to know too, okay? And this is a disclaimer, okay? There's going to be some disclaimers throughout this conversation. A disclaimer is that when you're working with a buyer's agent, when you're a buyer, you do not pay any fees. You do not pay an agent anything for them to be your agent. That is the seller's job. The seller pays the listing agent a percentage of commission. That percentage the listing agent splits with the buyer's agent, okay? So buyers, if you're paying anybody money right now to show you property, stop what you're doing. Go contact the police, go contact an attorney, because that is illegal in the United States, okay? Really important to know. So we have the listing agent, the buying agent, who are the realtors, and then we have this person, you guys may have heard of him, the MLS, right? It's a joke. It's not really a person, but a lot of people go, Adrian, who's this MLS guy? Who's this MLS gal? So the MLS is what's known as the multiple listing services. This is where agents go in and they input the listing. So the listing agent inputs the listing into the MLS. This is where all the agents can see which properties are for sale. Follow me? Now, here's the thing, guys. A lot of you are looking on Zillow, Redfin, Realtor.com. Those sites are great, but the problem is that those sites syndicate with the MLS. So when those sites syndicate with the MLS, you need to understand that a lot of agents, okay, this is really important, a lot of agents do not have their syndication go to the other sites for whatever reason, okay? That's their own preference. So there may be properties that hit the MLS that do not hit Zillow, Redfin, or Realtor.com. So as a home buyer, make sure you're getting a list of properties that are for sale from the MLS. Cool? Awesome. So that's the MLS. Now, number 4 is escrow. Now, depending on the state that you're in, you may not have an escrow. You'll have an attorney or title, which we'll talk about title. You have an attorney or title who's involved in the transaction. They act as escrow. So you guys, escrow is in essence, they're the middle person between the seller and the buyer. The middle person between the home that you're buying and yourself. They're going to do all the paperwork. They're going to do all of the due diligence. They're going to make sure that everything is done correctly. The paperwork, titles checked off, the loans checked off. They work with everybody else, okay? They work with the lender, the listing agent, the buying agent, title, and they are the ones that facilitate all of the paperwork. Does that make sense? So they're escrow. Now, escrow, you're going to hear from escrow throughout the transaction. If you're in a different state, understand, you'll hear from an attorney or you'll hear from title. Cool? Now, the 5th person that we have, and I personally believe the 5th professional in this whole lineup is the most important professional. And you guys, I want you to highlight this one because this is an important one. Your 5th professional is your lender. Yes, this is the person where you're going to get your loan from. So think about this. You have the listing agent, the buying agent. You have the MLS and escrow. All of them do not control how much you're going to be paying every single month. All of them do not dictate your loan over the next 30 years. The lender does. So the lender is the most important person throughout this transaction. So ensure that the lender you choose breaks down all of your costs, breaks down your different down payment options, breaks down everything, and really teaches you, especially you first-time home buyers or you VA buyers, really influences you on what you need to know, empowers you, and gives you the knowledge that you need to know as a home buyer to understand the loan process and what you're getting into, what your mortgage is. Is there any PMI? You guys may hear PMI, principal mortgage insurance. Okay, you typically find those on FHA transactions. Okay, we'll talk about that. However, you need to know what all of this stuff is. Okay, so make sure that the lender you choose is one that's reputable, and most importantly, I would go with somebody who you know who they've used before. Maybe look for some reviews, reach out to an agent. I know lenders all throughout the world. Simply send me a direct message and I can connect you with one that has some integrity, with one that knows what they're doing, and most importantly, one that's able to convey this information in a way that you can understand. Does that make sense, guys? Perfect. This is the most important role, okay? Now, number 6 is title. Now, who's title? Well, you guys, title is in essence the title company that's going to secure your deed, okay? The title company is, they make sure when you go to record on the property you find, that they're going to make sure that that property you record on has no liens. There's nothing to that property. It's free and clear. They protect the property, they protect the buyer and the property that you're buying. They make sure that you as a buyer, you are being protected for this home. So the title company is a very important role, guys. They're also going to be the ones that take your deed when it's time to record. They're going to take it over to the county recorder's office and get that deed recorded. They play a vital role in the transaction, okay? Now, as we mentioned, number 4, sometimes you don't have escrow. You just have title depending on the state, okay? Awesome. And then you guys, number 7 is the other services. And in other services, you have your termite, okay? You have your termite inspectors. You have your home inspectors. You may hear of a transaction coordinator. This is a major role for a real estate agent. They run all of the transactions, okay? You may need a foundation inspector. You may need your contractors. Your 7-1, guys, is all the other professionals that are involved. And the list can go on, okay? These are the ones that you're going to be dealing with and hearing from the most, okay? Along with your home inspector, who plays a vital role also. Cool? Awesome. So you guys, that's section number 1 on who's who. Now we're going to talk about section 2, which is all of the buyer's costs. What costs do I have, Adrian? Okay, I want to buy a home, but I don't even know how much it costs. Well, I'm going to break that down for you guys, and I'm going to give you all the costs that's related, okay? So make sure you're taking notes here. You guys, number 1 is your deposit. So your deposit is something that you're going to submit to escrow when you finally find a home. When you find a home that you like, your agent's going to say, okay, great, your offer got accepted. Now it's time for you to enter in your deposit. Now this is very important. Your deposit goes towards your down payment, okay? And your deposit is typically about 1 to 3% of the purchase price. So that's really good to know, okay? If you're buying a home at $300,000, 1% is $3,000 for your deposit. Now, your deposit is protected in your contingency period, which we'll talk about next. But no, the first cost is your deposit. That goes towards your down payment. The second cost is your down payment, okay? You need to put a down payment on the property. Depending on the loan you go with, you may have an FHA at 3.5% down. You may have conventional at 5% down. Or maybe you're a first-time home buyer, hint, first-time home buyer, and you only have to put 0.5% down, right? So you want to know your options. So the first one's your deposit, your second one's your down payment, and your third one is your closing costs, guys. This is the last cost that's involved. You have escrow costs that's involved in closing costs. You have your title cost that's involved. You have lending. When you go to get your loan, you have your loan cost that's involved. There's cost that's involved in getting your loan. And your loan officer, the lender you choose, will let you know what those costs are. But this is the important part, okay? Number 3, under your closing cost, it's typically 3 to 3.5% of the purchase price. So just write that down. Write down 3 to 3.5% of the purchase price. So if you're buying a home at $300,000 and it's 3%, it's typically on average for closing costs. What's 3% times 300,000? It's 9,000, right? So 3% of 300,000, so you have a $9,000 in closing cost. Does that make sense? Now here's a tip, okay? I want to give you guys a tip, and this is something you can share with your agent. there are times where you can stack that $9,000. Let's take for an example, you're buying a home at $300,000. You have 3% in closing cost, okay? You have $9,000 for your closing cost. There's times you can stack that $9,000 on top of the price. So if you're buying a home at $300,000, you know your closing cost is $9,000. Hey agent, can we write an offer at $309,000? So we're going to go above list price. However, we're going to ask the sellers if they can give us $9,000 back in closing cost. So that means that you're going to stack the closing cost on top of the price. Now you don't have any cash coming out of your pocket for your closing costs. You've built it into the price. You guys see that? You've built it into the loan in essence. Pretty cool, huh? So make sure you share that with your agent. And if you guys ever need help here, just ask. Say, hey, can we stack the closing cost on top of the price? It's an option you can do. Cool? Awesome. So your buying costs are very simple, guys. You have your down payment, and then you have your closing cost that's involved, okay? Now, another thing to know, on the buying cost, you also have your appraisal. When you go to get your loan, you have to order an appraisal. Depending on where you're at, an appraisal is typically around $400. You also need to do a home inspection. A home inspection, depending on the area you're in and the size of the home, can range from $250 to $500. So you're going to have anywhere between $700 to $1,000 in additional money that's going to come out of your pocket for inspections and appraisal. It's really important to understand. There's a lot of times I'll go to a home buyer and say, hey guys, time to pay for the inspection, and they may not have known about the inspection, okay? They may not have known that they need to pay that. Now, that was a mistake I learned early on in my career. Now I know right at the beginning, hey guys, there's going to be an inspection and it's going to cost some money, okay? So make sure you understand. You have your inspection cost and your appraisal cost. So those are all the home buying costs. Cool, guys? Get them down? Perfect. So we have the deposit, down payment, closing cost, which involves, it's typically 3 to 3.5%. Remember that. And then you have your appraisal, and then you have your inspection cost. So now we're going to talk about section number 3. And section number 3 is your contingency periods, okay, guys? So we know that throughout the escrow cost, right? We know that our deposit, I mentioned our deposit is going to be protected by our contingency periods. So this is where your deposit is protected. This is, you guys, your contingency periods are, in essence, it's the time where you go do all of your inspections, you do everything you need to do, all of your findings to know that you feel comfortable buying that home, okay? Now, under your contingencies, you have, the first one is your traditional 17-day inspection and appraisal contingency. So you guys are going to see this. Your agent is going to say, Mr. or Mrs. Buyer, you guys have 17 days for your inspection and appraisal contingency. What does this mean? This means that you have 17 days to do all of your investigations, your home inspection, your home appraisal. Based on your home inspection, do you need to do any further investigations? Do you need to research the roof? Do you need to call a foundation guy out? What exactly, what inspections do you need to get done? Because you need to understand this. When your 17 days are up, the other agent is going to ask for your agent for you to remove your contingencies, your inspection contingencies. You guys, when you remove your inspection contingency, your deposit is now at risk. Meaning, if you back out of the property after those 17 days, your deposit is at risk. Your deposit, it could be forfeited and sent to the sellers for, in essence, breaking that contingency period. You are, in essence, in breach of the contract. Does that make sense? Now, you also have, under your 17-day inspection and appraisal contingency, you also have your 21-day loan contingency. So what does this mean? Well, this means that throughout 21 days, so your 17 days are still in effect, and then from the start of escrow, 21 days after, your lender has 21 days to get you full loan approval, meaning the lender knows and has been very transparent with you, so you know that your loan is 100% good to go. You guys are going to docs, you're going to fund, you're going to get the deal closed. So the lender has 21 days to do their job. You as a buyer, along with your buyer's agent, you guys have 17 days to do your job, and that's all of the inspections and appraisal contingency. Now understand, once you sign off on your 17-day, your 17-day inspections, okay, once you sign off on that contingency period, your loan still protects you for 21 days. But understand, that's only if you're backing out because of a loan issue, not because of a repair issue. This is something to really know. So your deposit is going to be protected for 17 days and then for 21 days throughout that escrow period. So your lender has to be on it and you guys have to be on your inspections. This is really, really important to know. Now, a pitfall, okay, here's a pitfall. A lot of agents will recommend buyers to lower their contingency period. Let's put 10 days to make our offer more presentable, okay? That's a way that you can make your offer more presentable. You change your 17-day contingency period to, for instance, 7 days, okay? An example would be 7 days. So now instead of 17 days, you have 7 days to get all your reports done. That's fine. Just make sure your agent can help you get it done. Because when it's time to release your contingencies, that deposit that you put down is now at risk. Okay. Now, if something comes up on the inspection, something comes up for whatever reason, and you guys need to cancel, you can still cancel and get your deposit back as long as you did not sign off on your contingencies. Okay. Really important to know. The moment you sign off and you back out, you are more than likely going to lose that deposit, okay, guys? So that's section 3, which is your contingency period. Really important to know, okay? Awesome. You guys, now we're moving on into section 4, and this is the last section. This is the home buying process, okay? So we've talked about who's who, right? We've talked about all of the costs that's involved. We spoke about the contingency periods. We know what we're getting ourselves into. Now it's time to start the process, okay? So now this is the home buying process. And step number 1 to section number 4, we're going to have steps in here, okay? These are all the steps that we're going to take throughout the next 30 days from the time you find a home to the time you close escrow and move in. Cool? Awesome. So you guys, step number 1 is you must get pre-approved. Write this down in big letters, highlight it. You must get pre-approved. We know that choosing a lender is very important, right? We all know that. So therefore, the lender that we choose has to be important, and we have to get a pre-approval. The pre-approval lets us know a couple of things. It lets us know how much of a down payment are you putting, and that you actually, you're pre-approved to buy that home. It lets the seller know this person can afford it, this person can buy it, and he's qualified to buy it through a bank, okay? So that's your pre-approval. Now, you guys, I do want to share some pitfalls in regards to a pre-approval. The biggest pitfall, do not go look at a home without being pre-approved. It's the biggest mistake that I see buyers make in this market. You guys, buyers, they don't want to get pre-approved, so they go look at a home saying, we're going to find the right home and then we'll get pre-approved. I know I get pre-approved. I know I can get pre-approved. I know my credit's good. I know my income's good. I know that. Okay, fine. And then they go look at property, and then they come to me and go, Adrian, I found the house, I found the house, I found the house. Okay, that's perfectly fine, but we have to get you pre-approved. And then they go to get pre-approved, and something pops up from when they were 18, and now all of a sudden they don't qualify. You guys, do you know, I mean, I got to ask you, if you found a home that you really wanted and you didn't qualify for it, how's that going to make you feel? And that's how most of my other clients felt. So therefore, don't make the same mistake. Please do me a favor, get pre-approved, okay? Now we have a rule at our team. We don't show anybody a home unless they're pre-approved. So step number 1, get pre-approved. Now step number 2, this is the exciting part, guys. After you've been pre-approved and you understand your programs, you understand what you're getting into, now's the time to start looking. But before we start looking, I want to go over something, and this is what a lot of people don't talk about. And these are all of the different sales that are involved that are going to be out there in the marketplace when you're looking. I don't know how many buyers have came to me and said, Adrian, what's a short sale? Adrian, what do I do in a new construction? Okay, so we're going to break them down. Are you guys ready? Okay, so the first one is a standard sale. So when you're out there looking for homes, one of the properties you're going to find is a standard sale. A standard sale is a traditional sale, guys. It's an equity sale. A seller has equity in the home and they need to sell it. They're going to make a profit on it, or they may not make a profit. They may break even, but in essence, it's just a regular, basic, standard sale. One homeowner selling their home to somebody who wants to buy it. Make sense? Perfect. Number 2 is your new construction. So these are the new homes being built in your area. Now, here's a disclaimer with new construction, and here's a pitfall for you buyers to avoid. Do not go look at a new construction without your agent. You guys take your agents with you. I don't know how many times I've heard of stories where agents come to me and they go, Adrian, my sister just went into a new construction. They really want the home. They signed in, but they didn't take me with them. What can I do? Unfortunately, you can't do anything, because if you don't take your agent with you and you sign in, the agent you were using can no longer help you or protect you throughout that sale. So you guys, please take your agent with you. Have them sign you in. They can protect you. They can make sure the paperwork's done correctly, and they can make sure you're not being taken advantage of, okay? Perfect. So that's new construction. Those are the new homes being built. Number 3, guys, number 3 is a short sale. Now, when you write down short sale, I want you to put AKA, so also known as a long sale. You guys, there is nothing short about a short sale, okay? Now, this is why. Because a short sale is a home that's up for sale where, unfortunately, the owner who owned it, they may have lapsed on their loan, say they unfortunately didn't make their payments, and now they need to short sell it. So they're selling it short of what they owe. Does that make sense? They're selling it short of what they owe. So the home can be worth $300, they owe $400, so they're short selling it. Make sense? Now, here's the issue with short sales, is that a lot of them are not in the best of shape. So if you're buying a short sale and you're a first-time home buyer, and for instance, you're buying an FHA, which I want you guys to watch the other video talking about FHA and conventional. But if you're buying an FHA property, there are guidelines that that home needs to meet. If a short sale is in distressed condition, it's not going to qualify for that loan. So you guys, to save yourself time, avoid short sales as a first-time home buyer, because they're long sales and you may get excited for nothing. Because here's the thing, short sales, they're not negotiating directly with the seller like a standard sale is. A short sale, you're negotiating with the bank. So yes, the seller will, the owner of the home will approve the offer, but it's up to the bank to decide if they want to accept that offer. And it takes 3 months for them to respond, and then another 2 months for you to get a counter, and then another 3 months for them to do their process. So a short sale is going to take you anywhere between 6 to 9 months on average. So be careful, okay, guys? Be careful. Now, the next one, the 4th sale, is what's called an REO, guys. So next to REO, put AKA, also known as real estate owned. So this is a property, right, that was either in a short sale position, they wasn't able to sell, it foreclosed, and now what the bank does is the bank owns the home. They've taken it back, they own it, and they're selling it. They may be selling it with an agent, it may be out on a system for sale, but in essence, REO is a bank-owned property or a government-owned property. It's owned by either a bank or a government agency, okay? And more than likely, these properties are in distressed conditions. Some of them either went to an auction, didn't sell, they're in bad shape, guys. So listen, with REOs, you're dealing with investors, you're dealing with cash buyers. So as a first-time home buyer, or as a buyer who's getting a loan, you guys, REOs may not be something you're looking for. However, if you're an investor watching this and you guys want to grow your portfolio, you have all cash, reach out to me, reach out to your agent, let them know, because REOs can be a good source for you, okay? Now, the next one is auction, guys. Now, auction is very similar to an REO. It's owned by a bank or it's owned by an agency, and they're going to sell that property. The difference is they're doing it auction style, right? Going once, going twice. Do I hear 100, 200, 300, 500, sold, right? It's very fast-paced. The difference is that they more than likely do not accept finance offers. And if they do, there's a lot of fees that are involved. So you're competing against cash investors. So auction style, guys, it's great to get a deal, but if you're going through a loan, it's going to be very difficult, okay? So just remember that. Investors, that's the perfect place for you to go. And then the last is probate, guys. So number 5 is probate. So I want you to write down probate. And next to probate, this is somebody who's owned a home, okay? They've owned a home and unfortunately they've passed away and there's no one in charge to, in essence, sell that property. So what happens is that it goes back to the state, it goes back to the city, and the probate courts, and in essence goes to the courts, and the courts have to find a family member. They put what's called a conservator. You may have heard of conservatorship, right? Or you may have heard of a petitioner or an administrator. They're going to put someone in charge of the estate for selling that property. It's a probate. It unfortunately wasn't in a will, it wasn't in a trust, it wasn't protected. So you guys, there's another video on how to protect your property the right way to avoid probate, but unfortunately they did it and now it's in the court system. The problem with probates, they also take some time. They could be in distress condition. They could be in original condition. So if you're getting a loan, make sure that the probate, whatever property you're looking at, if it's probate, make sure it qualifies, okay, guys? So those are the traditional sales that you're going to see out there, okay? So you've gotten pre-approved. We're excited. We know what sales are out there. We know what we're going to look for. We have an idea, right? And now what we're going to do is we're going to target your ideal home. So step number 3 is we're going to target your ideal home. This is where you have to share everything, you guys. Please do me, do your agent a favor, do yourself a favor. You have to share everything with your agent. What type of schools are you looking for? What neighborhood would you like to be in? Tell me, what activities do you like, right? This is me, I'm the agent, I'm asking you, what activities do you like? Where is it that you see yourself growing your family? These are all questions, agents, you need to ask, and answers for buyers that you need to give your agent to help this search not only be more effective, but really help you get what you're looking for. The more detailed you can be with your agent, the better off you guys are, okay? So I really wanted to share that with you. And another thing, you guys, when you're sharing your ideal home with your agent, tell your agent, hey, can you also go look in these areas? Can you go door knock these areas? Can you see if we can find a property that's not on the market? One thing that we do here at our team, and agents, I want to empower you to do this. If there's a home that's not on the MLS or not for sale online, we'll go find it for them. So we'll go door knock different areas, door knock different communities, make thousands of phone calls and say, hey, my name is Adrian. I have a buyer. Her name is Susie. She's qualified, ready to buy a home. Have you thought about selling your home? And you'd be surprised how many times we line up the perfect home to the home buyer and the home was never on the market. So if you can't find the home on the market, ask your agent to get creative, okay? So that's a tip for you guys. Awesome. So number 3 is we're going to target our ideal home. We're going to figure out what we're looking for. And then number 4, guys, we're going to go out. We're going to actually look for property and we're going to write an offer, okay? So we're going to go see property. You finally found the one. You look at it. This is the one. It's the one. I love it. I can see myself living here. And you write an offer, okay? Now, I want to give you a tip and a pitfall also. A tip is when you write an offer, make sure you write a strong offer. Make sure your agent has a cover letter. It's explaining why you are buying the home to be in the beginning. Why are you and your family moving into the neighborhood? Share the story with them. Make sure it's packaged correctly. You guys, packaging is everything. So just make sure that you ask your agent to package your offer correctly. Now here's a pitfall, especially for homes that just hit the market. You guys, please, if you're writing an offer on a home, don't undervalue that property. If it just hit the market, do your research. Have your agent. Another tip, ask your agent, can you run what's called a comparative market analysis? They know what you're talking about, a CMA. You want to know what are other homes in the area selling for. This will give you an idea of how much to offer. But do not lowball an offer. Do not lowball a property, especially if it just hit the market, guys. 90% of home sellers that I've worked with, they won't even look at it. They say, Adrian, throw it away. So just don't waste your time. Make sure you guys are being realistic with the price, okay? Awesome. So we're going to find the right home. We're going to write an offer, and then we're going to get our offer accepted. And this is an exciting time because this is when your agent calls you and says, you guys, all of the hard work that we were working on all this time, it's finally paid off and your offer's accepted. However, what they don't tell you is now's the time we got to get to work. Now's the time that remember your contingencies? You guys, now's the time where your contingency period starts. So guess what? Once you get your offer accepted, your agent's going to say, hey, Mr. and Mrs. Seller, now it's time for you to send in your deposit. So you're going to write a check or wire your deposit. We talked about the deposit, remember? You're going to send in your deposit, and then after you send in your deposit, we're going to start the inspection. So we're going to get the home inspection ordered. We're going to get the termite inspection ordered. We're going to get all of the inspections that we need ordered, and then we're going to go through those 17 days, okay? We're going to meet for the inspection. We're going to make sure that you guys don't participate in the appraisal. The agents participate in the appraisal, but you do participate in the inspection, okay? So you'll go out, you'll see what's wrong. If there is anything majorly wrong with the property, you'll submit what's called a request for repairs. Your request for repairs is in essence saying, hey, Mr. and Mrs. Seller, I feel like these items need to be fixed. Now, here's a disclaimer, here's a tip, here's a pitfall, okay, for all of you guys. You're not buying a brand new home. Unless you're buying a brand new home, do not give them 5 pages of repair, guys, please. I've gotten a whole booklet of repairs, and it's like The property was built in 1940. We're not selling you a new home. So just understand, when you're going to write a request for repairs, make sure it's major items, okay? Let's not nitpick here. This is where you could get in trouble. This is where the seller can go, you know what? I don't want to work with them. You could lose the deal. So just be careful, okay? Just be careful. So we're going to write an offer. We're going to make sure that that it gets accepted. We're going to get the offer accepted. Once we get the offer accepted, we're going to send in our deposit. We're going to start our inspections. We're going to go through our appraisal. And your lender, you guys, this is where your lender's going to work with you a lot. This is where you and your lender are going to be going through all of your paperwork. They may ask you, okay, and here's a disclaimer. They may ask you for the same paperwork 15 times. Just submit it to them. Just give it to them 15 times. Sometimes that's just what they're asking for. The bank is asking it for them. The underwriter, right? Well, you'll learn about the underwriter in the next video. But the underwriter is saying, hey, I need this information again. I need more of it. So you're going to be working with your lender and giving them the necessary documents they need to get your loan done, okay? So you're going to go through your inspections. You're going to go through your timeline with your lender. And then once you guys get towards the end, guys, once you get towards the end, now it's time to sign loan docs. So you've gone through your inspections, you've gone through your whole loan process, the loan's approved, you signed off on your contingencies, everything's good. Now the loan officer is going to say, great, we're ordering docs. They're going to order docs. Now it's time for you to go sign off on those docs. So you're going to meet with the notary. The notary is going to go through all of your docs. Now, Adrian, what are docs? They're your lending docs. They explain everything about the loan that you're getting. You sign off with the notary. They send it to escrow. Escrow packages it, sends it to title. And at that point, escrow is going to tell you to wire in your closing funds. Okay, guys, this is important. Your closing funds is all of your closing costs, your down payment, and everything put into one. So escrow is going to say, okay, Mr. or Mrs. Buyer, now it's time for you to send in your closing funds. You're going to wire in your closing funds, okay? And here's a disclaimer with wiring information. Unless it comes from a secured password email, do not send a wire. Call and confirm the number. Wire fraud is at an all-time high right now, guys. So make sure that you take precaution. Make sure your agents take precaution and double check the account numbers, okay? So you're going to send in your closing funds. Once you send in your closing funds, escrow is going to process them, send them out to title. Title is going to package up your loan docs, gather all your funds, and now what they're going to do is they're going to issue saying, great, we funded. So you're going to hear the magical word, we funded, right? So it's one of the last steps on here. We funded. When you fund, that means that the funds are there, titles acknowledge them, and now the next step is just to record. Now, once you guys fund and they've acknowledged funds, they're going to grab your recording documents. This is what the seller's notarized. This is what you've signed, and they're going to take it to the county recorder's office. This is the most exciting time, because now you guys get confirmation that we've recorded. And what does that mean? That means that the home was put from the previous owner's name into your name, and the home is officially yours. Your agent calls you, says congratulations, you guys meet at the property, you guys pop a champagne bottle in front of the house like my friends here who just bought their second home, and everything is exciting. You're excited, the kids are excited, your wife's excited, maybe you're just excited by yourself, who knows, but everybody's excited about who's buying this home, guys. And this is where all the work has finally paid off. All the countless calls, the countless amount of paperwork that you had to submit over and over again, and it's finally done. So you guys, that's the roadmap. That's the entire thing you need to know. That's everything you need to know to buy a home. The who's who, the escrow costs, the contingencies, the different terms we need to know, the entire buying process, the different sales. You guys, that's everything you need to know as a home buyer. So now you can be excited about starting this journey. Now you can call your agent, or you can go call your lender, whoever it is you need to call your spouse, call your kids and say, you guys, it's ready. We know exactly what to anticipate on the road ahead. So I just want to say congratulations to all of you for watching this video. Thank you so much. I appreciate it. I hope this helped. I hope you got a lot of information from this. If you did, please do me a favor. Share this with everybody, guys. Look at I'm not asking for you to call me to help you buy a home. I'm not asking for anything. I'm just asking that you share this, because I know a lot of home buyers have a lot of questions. A lot of first-time home buyers have a lot of questions. A lot of VA home buyers have a lot of questions, right? And real fast, since we're at the end, for those of you that want to continue watching, you guys, I just want to real fast, I want to go through the different down payments, okay? So we talked about FHA, okay? we talked about FHA, and then we talked about conventional loans. You guys remember that? Now, on average, an FHA loan is anywhere between 3 to 3.5% down. Okay, it's really important to understand that. A FHA typical down payment is about 3 to 3.5% down. You do find some at 5% depending on your lender, okay? Now, conventional, they can go as low as 5% down, but you typically find conventionals at 10%, 20%, and so forth and so on as far as a down payment, okay? But this is why I wanted to spend some time with you. For you first-time home buyers, I want you to understand this. You guys can buy, okay? First-time home buyers, okay? First time. You guys can buy a home at 0.5% down. You guys, 0.5% down. So I want to do this math with you real fast. If you're buying a home at $300,000 times 0.5%, what is that? That's $1,500 that you're spending for a down payment. Okay, it gets better. Let's say you're buying a home at $500,000, okay? You're like, Adrian, I live in a certain area. Okay, I get it. So you have 5%, 0.5% down on $500,000. You guys, your down payment is $2,500. $2,500. I got a question for you. How many of you have $2,500? How many of you have $1,500? How many of you think you can go find $1,500 or $2,000? Because that's all you need for a down payment to buy a home. And then it gets even better. Check this out. VA buyers, you guys, VA buyers. You don't put anything down. You guys, thank you for your service. The country rewards you. You don't have to put anything down for a down payment as a VA home buyer. So I thank you for spending the last few minutes on this video, because you got to see as what an FHA, how much little you can put down to buy a home. Conventional, 5% down, 20% down, you can do that math, you can get an idea, okay? Now understand, FHA, they have what's called limits. They have price limits, okay? So price limits on an FHA deal, what does that mean? Meaning, FHA loans only go up to a certain amount on the price of the home you're buying in certain areas. So know your price limits. Ask your agent for the price limits. I'll do another video for you on price limits for FHA. Cool, guys? Awesome. So now you know, okay, for those of you that stood extra, now you really know everything. You know who's who. You know escrow costs. You know the process. You know the different sales. You know what to anticipate throughout escrow. And not only that, you now know how much you can buy a home for with little to nothing out of your pocket. And if you stack the closing cost on top of the price like we spoke about, that's all you need to buy a home. That's all you need to own your own home. Isn't that wild? So you guys, reach out to your agents, reach out to your lenders. This is a huge opportunity for all of you. I hope you got a lot of information from this video. I thank you for tuning in.